My guest today says that inflation will likely double this year. He also says that we might see a tremendous market correction and that people tired of being cooped up at home might just well send silver soaring through the roof. Maybe I added the roof part, but he says soaring. He's going to be unveiling his three big, bold predictions for 2021 and beyond here on this show. Please welcome Jeff Clark of goldsilver.com. Jeff, always good to have you on.
I'm great to be back with you, Daniela. The last time I saw you was in Grand Cayman, and oh, how I wish we could be doing this there.
Yes, in Grand Cayman and very, very pregnant. That was before all the lockdown
Yeah.
started, but definitely good times. Jeff, we're going to be talking about your big, bold predictions. I don't know if I've already alluded to some, but I wanted to start with that one where you say people tired of being cooped up is really what's going to send silver prices soaring, because I need to know why. What's the link here?
So the link is this. So at some point, the economies are going to reopen, right? There'll be a new normal. It might be rocky at times and that sort of thing, right? But at some point, things are going to reopen. I'm tired of being cooped up at home, Daniela. My
Me
favorite
too.
rest my favorite restaurant is closed. Shutdowns, lockdowns, all this stuff, limited travel, can't go to the store as much. What I'm suggesting is that when the reopenings pick up steam and start to accelerate, that's going to increase spending. So when things reopen, Daniela, will you eat out more? Do you think you might go to the movies more? Do you think
Yes.
you might go to the mall more often or spend more cash? Do you think you might travel more? What I think is going to happen is the 7.8 billion people in the world that are locked down or near a lockdown are going to start spending again when things reopen. And increased spending is going to push on inflation. And I mean, not monetary inflation, but the CPI, the actual consumer price index. It's going to push on consumer prices. So you have likely increased spending at some point, right? Combine that with savings rates in the US are at the highest record ever. Ever since the Fed started keeping records on savings rate in the US, they're at the highest level right now. So you have increased spending combined with the likelihood of consumers that are well cashed up, right? They have more cash now than they ever have had. So you put those two things together, and oh, and let's throw in fiscal stimulus. So we've had monetary stimulus, right? But fiscal stimulus is different. Fiscal stimulus, what Biden wants to do is cash and funds that get injected directly into the economy. So monetary stimulus goes through the banking system, ends up inflating asset prices, right? Fiscal stimulus is different. It's like me giving you $100 bill and it's you put it in a savings account versus going out and spending it immediately that day on groceries. That's the difference between monetary stimulus and fiscal. Fiscal gets directly injected into the economy. I think that's going to push on prices. And by the way, uh, we already have input prices that are rising. Pull up any commodity chart, right? Soybeans, corn, wheat, they look like Bitcoin charts.
Mhm.
They've just gone completely vertical, right? Some are calling it Bitcorn and bit beans because the prices of these things have just gone completely vertical. And the reason that's important is because these are things that are used to make other food products and other products, and so the input costs are higher. So can manufacturers really not pass on that cost? They'll probably be forced to pass at least some of it off.
Well, I hadn't
Some
heard. Sorry, I hadn't heard the Bitcoin. So
Yeah. Yeah,
that's
I
definitely.
stole that from somebody else, so I made up my bit beans one, so you can steal that one. But the point is, so my bold prediction is this: I think the CPI doubles within a year. Believe it or not, it was only 1.4% at January 13th, I think was the day. I think it goes to 2.8 by this time next year. So you have me back on your show this time next year, and we'll see if I'm right. But I think that's the big bold prediction. I think that's what is very realistic. And 2.8%, that's not really even anything, right? That's actually historically kind of low. So I think inflation doubles according to the CPI by this time next year.
I think that's really interesting, Jeff, because usually, when we talk about silver prices rising, it's that industrial component, it's looking at the Green New Deal, but looking at inflation is interesting. But where could you see prices headed for silver?
That's my second bold prediction. I think that silver prices double also within a year, partly because of the inflation argument, but partly because of the industrial uses that are going to definitely increase. There's going to be a lot of pressure on prices just because of the increase in industrial use. Just take Biden's plan, his green and infrastructure plans that he wants to do. You know, increase in EVs, sustainable housing, solar, all these green technologies require silver. Just as one example, an EV,
Yeah.
electric vehicle, uses almost twice as much silver as an ICE vehicle, an internal combustion engine vehicle. So if you're increasing EV use in manufacturing, you're going to require more silver to do that. And that's just one example. But the Silver Institute thinks it's going to grow so much over the next 4 years while Biden is in office that EV use, the automotive industry will use the second most silver of all the industrial uses for silver. It'll be the second largest demand from industry will be for the automotive industry. That's how much they think it's going to grow. And solar is the biggest, and it's only going to get bigger as well. So one of the issues is you're going to have this dramatic increase and push for more green technologies, more industrial use that uses silver. That's going to push on the price. But the biggest component of determining where the silver price is going to go is investment demand. Investment demand is the one component that determines if silver is going to rise or fall. If investment demand is down, the silver price tends to fall. If investment demand is rising, silver prices tend to follow and tend to go up as well. I think we're going to have greater investment demand. Look at just where we are right now. Silver ETFs, record levels. Depositories around the world that hold physical silver, record levels. Just at goldsilver.com, record volumes. We still have much higher volumes now than our 10-year average or whatever the case is.
What's the hottest product? What's the one people want the most that you're seeing, Jeff?
It's definitely silver first. Although we have had a lot of people, Bitcoin millionaires, trading some Bitcoin for gold. But the biggest product by far for us is the mint case of silver eagles, 501 ounce silver eagles. Yeah. The second most popular product has been the 100-ounce silver bar.
So let me ask you, Jeff, because we touched upon the Green New Deal and EVs. Do you have any insights or from what you're hearing from your sources as to how much silver there is out there right now and how much we will need to meet all these initiatives? Like, is there a huge gap? Is it not so big of a gap? Is there going to be an immense gap?
I think most of your audience knows that, a lot of silver gets recycled. It's not like gold. A lot of gets used up, and the estimates vary anywhere from 15% to maybe 30% of silver every year just gets thrown away. You can't recycle it. Like on a solar panel, it's actually a paste. And so how do you recycle a paste? That's really hard to do. You'd have to have it in large quantities, right? So they don't. Silver contacts, which are vital in solar energy panels, but they're really small. And so that's hard to recycle. And so a lot of that just gets thrown away. The same with a cell phone and other things like that. It's not a lot of silver, and so it's not economic to recycle. And so you have to have new supply every year, resupplying that market. And since 2014, some consultancies say it's since 2015, silver supply is in decline. New silver supply is in decline. So you have rising demand and you have falling supply at the same time. And the issue with supply is it's structural, meaning they can't just flip a switch and all of a sudden produce 100 million ounces more silver. So it takes time, and so that's where the crunch could come in. Now, if you look on the LBMA site, they'll show that they have a lot of silver there. But look what happened in 2020. Right? Was it April, May, June, right around there? The COMEX actually had to go to London to supply some of the gold contracts that of people that want a delivery. So there's a real issue there that this could, rear its ugly head. It's not the reason I invest in silver, but this is a definite risk. I could easily see this taking place. And of course, that's Mike Maloney's famous, unaffordium and unobtainium scenario. At some point, silver may be hard to get for the average retail investor. It may be reserved for industry or institutional investors or governments, high net worth. You may have to order, high minimums or something like that. So at some point, I think something like that could happen.
Wow. Okay. So double inflation, double the silver price. What's the third bold call here?
My third big bold prediction is this. I think the mining stocks will outperform their underlying metal by 5 to 1.
All right. It's not the current scenario.
No, no. But now, why do I think that?
Yeah.
Well, first of all, it's because they're so undervalued. The EV, enterprise value to EBITDA ratio, this is something like John Hathaway talks a lot about, right? That ratio for mining stocks is less than half what it is for the S&P 500 right now. So, and we're looking at the S&P 500, not, Tesla and GameStop and all those things, right? We're looking at the average stock, and mining stocks are valued at less than half that. So we're starting at a dramatically undervalued place. But the bigger reason is because they've already done that. They've already done a 5 to 1 ratio. Where we are right now, I'll give you the exact number actually. If you look at the Barron's gold ratio, the Barron's stock index, the longest running one we have, the ratio of that to gold, it was at 9.8 at the peak of the market in 1980. Right now, we're at 0.5. So gold stocks would have to outperform gold by over 18 times just to get back to the 1980 high. So maybe my bold prediction isn't really all that bold after all, saying it'll just be 5 to 1, because I don't know if it'll go back there or not. And I'm not saying, by the way, that gold mining stocks will go up 5 times. I'm saying they'll go up 5 times to gold or 5 times to silver. And the juniors are going to do a 10x to their underlying metal. That's what I think is coming before this cycle is over. At the top of the cycle. But if you can
pick the winners in the junior space, as we know, it's such a difficult task to do. But do you think it's going to be a little bit easier?
Easier. The interesting thing about the gold and silver markets, right, is that there's not a lot of them. There's not a lot of miners out there in the gold and silver. They're very small. In fact, you could count on maybe 2 hands how many primary silver producers there are. There just aren't that many, where the primary metal that they produce is silver. There's not that many of them, so it could be easier in that sense. But I think the real point of this, the real rush is going to be when the mainstream investor moves into the space. And I think when that happens is when mainstream strategies start to fail. In other words, when the S&P and the Dow and all that, when they start to get weak, or the trading strategy they're using aren't working anymore, gold and silver miners are going to be sitting right there with humongous free cash flow. They're going to be the big green on the screen, right, at Wall Street. And I think at some point they're going to move into them, and that's what's really going to drive this. So, despite the big run up we had last year in some of these stocks, I think we're just, we're going to see a lot more of that ahead, and even more of it ahead, even bigger gains, annual gains than what we saw last year.
So getting exposure to silver, the best play for you now, is it, choosing a silver miner like a First Majestic, Hecla, America Silver, or being in a silver ETF, which gives you exposure to a basket here, or owning the physical?
Yes.
So all of the above.
In other words, I think someone should own physical, because you may need more than just price exposure in the kind of crisis that I think is ahead. I mean, look at it this way. The system is probably going to keep going like this as long as the Fed is, printing currency and highly supportive, highly accommodative. As long as stocks are going up, that's going to continue. I think when that changes is when gold and silver become more mainstream again. And at that point, when there, or excuse me, when there's a crisis, and that's probably going to continue as long as the dollar is the king. As long as that continues and the Fed is still supportive, that's probably going to happen. But when it changes is in a crisis, and in a crisis, you may need more than just exposure to the price. You may need gold in your portfolio for portfolio protection, but you may need physical gold for lifestyle or standard of living protection. So I strongly encourage everyone to start with physical. If you want to trade, maybe you could do that with a paper product. But in a crisis, paper products may not do as well, right? We already saw that last year when GDX separated from its underlying stock components, right? The stock components fell this much, but GDX fell this much temporarily. But
Yeah.
that kind of thing can happen with a paper product when you're trying to link those things
And,
up.
and when you own your physical, Jeff, I know we've spoken about this. Do you, how do you like to store it? Do you like your metal outside of the US, close to home?
Again, for me, the answer is yes. I want some that's immediately at my disposal. Now, I don't keep any in my house because I'm in the public eye. I've had gold stolen out of my home before. I've written about that on our website if someone wants to see it. I actually
Awful.
have a dummy file of fake gold coins sitting on my desk if we get robbed again. I don't keep it in my house, but I do have some very close by if I need it in case of any kind of emergency. But I don't want to have all of my physical metal in my own jurisdiction. I
Mhm.
want to be internationally diversified, and I think that's how you and I met at Cayman before. Is diversifying internationally where you hold some of your bullion. I think you need to. I think you need to hedge your future. I think you need to hedge what's ahead, and to hedge your future, that probably includes some kind of strategy for international
Yep.
diversification of your bullion.
Finally, just to wrap, because everyone's talking about GameStop here. Could you imagine if they did that with a gold or silver stock, Jeff?
Right. I think there's a silver stock out there that is going to be the next GameStop.
You think
Absolutely.
so? Yeah.
Absolutely. Absolutely. In fact, there'll probably be more than one. There'll be a whole bunch of them.
All right. Jeff, it's always a pleasure speaking with you. Thank you so much for joining me today.
It's so great to see you again, Daniela.
Thank you. Thank you. And thank you for watching. We'll have much more for you on Stansberry Research, so be sure to stay tuned. In the meantime, follow us on all our social media platforms. Thank you for watching. I'm Daniela Cambone.